Perfect. So one of the biggest things when it comes to Fibonacci, I always do it at the 4 hour, sometimes even the daily. Really just depends on like how big you're trying to trade or what you're really looking for. Specifically for me though, I like trading on the 4 hour or the daily whenever it comes to Fibonacci. Also, if the music's too loud, please let me know so I can turn it down. But yeah, to take out the fib retracement, all you have to do, you can literally click from the top over here. I usually go from the top to the bottom of the current high and the current low. Or even I will go from the current low to the previous high, just opposite. You can do either or. Just depends upon where the market is heading, right? Since now we're actually heading back up, the retracement would be from top to bottom. Boom. Right, you can kind of tell, you know, some of it does make sense. There are some areas where the market has been hit. And you can definitely tell, you know, support resistance has been kind of labeled in the markets, if you would say. Let me check how many pips this is. 85. So one of the biggest things when it comes to this is going to be kind of figuring out, okay, where was the market heading at first, right? So first, what I'm gonna do is just take out my trend tool on the daily time frame. You can do this. It doesn't have to be perfect. Just being able to kind of figure out, you know, where the markets are headed, right? So I kind of saw. Here, let me do this real quick. Do that. Can everyone mute themselves as well? It would really help out. But for the most part, since this whole entire downtrend, everything has been going down into a certain area. And you can definitely tell that, you know, this was the trend, right? It was going down and then it was actually broken abruptly and then finally was actually able to take off, right? You can also do the same for the bottom half, right? Just completely, you know, it doesn't have to be perfect, like I said before, but just being able to kind of understand where the majority of the actual market was kind of, you know, heading in the right direction, right? So here, the reason why the markets now have been going a little crazy is actually because of coronavirus and because of everything that's going on in the news. The markets have been a little bit unstable lately, at least for the US dollar. So that's why you see a huge increase in the differences between the euro and the USD. But yeah, so first thing I do, I just drive the trend lines. Okay, now that it's broken trend, I can definitely tell that it is pushing up, right? This is going to be the new area to be looking at. And it's going to be, you know, mainly this, right? That's going to be mainly it for right now. You're going to kind of see like this is probably going to keep on going up for a little bit until it hits some of these higher levels over here. But now what we can do is just zoom in, right? I go to the 4 hour. You can kind of tell, you know, perfect. Perfect. There we go. So you can definitely tell, like I said before, you know, the market definitely reacted in these areas. It has had some good areas of resistance and support for where the 23.6 is, right? And that's usually what it is. It's kind of like, it's a light area of support and resistance. So just do light area of support / resistance. Boom, right? That's what the 23.6 is. It's also called the continuation zone options too. So 23.6. Right, continuation zone, boom, right? Now what we're gonna have, which this really just means, it just means that it does a lot of breaks and retests, right? Into the same direction, right? So if this is going up, it'll do a lot of breaks, retests, and continue on. That's what's called continuation zone, right? Now we're gonna do 38.2. This is gonna be a little bit more of a, it's gonna be a kind of like a medium level of support / resistance. It's gonna be and then 38.2. Right, nothing too crazy, but there are definitely levels whenever it comes to 38.2 of you actually having, some good support and good resistance in those areas. They're not for sure able, you don't want to completely enter at 38.2. You want to see what the market does, right? So sometimes the market, what it'll actually do is it'll kind of break past it sometimes because, the markets aren't perfect. And what it'll do is start playing around in this area. Once you see it that it's completely broken beneath and stays beneath, it's more than likely going to continue on down. It just takes some time to actually kind of look out for it and keep it under your wraps, basically, and be able to kind of see like, okay, if you zoom in here, you're able to see like there's not a lot of movement to the upside, right? Here there was, right? There was a good amount, but as soon as it went up and hit this little peak right there, it didn't want to go past this little wick, right? So you can kind of tell it was not going to stay up there for very long, right? And then boom, it fell all the way back down and went back down to the bottom. So for that, now what we're going to be looking for, 38.2, like I said, it's a lot of breaks and retests as well. Just a little bit more difficult, but there are some breaks and retests in it. Right, broke, retested. Now the 50. The 50 is the strongest level. Strongest level of support / resistance, right? Boom, right? Now, it is the strongest out of all of them, and it's because for some reason the markets just love 50%, right? Whenever you are trading institutionally and you see a really big candle, they always talk about the halfway mark between the institutional candles, right? And it's for some reason, I don't know per se why it's always 50%, but usually about halfway through the entire movement of the market is where that's the strongest level of support and resistance, right? So more often than not, it'll actually break. It'll actually like go above the 38.2. It'll touch it and then bounce off of it. Now, this has been like I said before, a very volatile month, the last couple of months because of coronavirus and everything. So that's why it hasn't been following all the rules. But it definitely has still had some inclination that it is still there, right? You can definitely tell that once it actually broke it and it broke free of it, it just took off again, right? So it does have some sort of leeway in the markets right now. It's just not as strong. And then these are just mirror points of exactly what I just went over, right? So you're going to have the lightest, which is the 88.6, right? You're going to have, again, medium, which is going to be between the 78.6 and the 71. These are definitely going to be medium. And then the strongest kind of go between these two as well, and also the 61.8. So the 61.8 is another really high area for strong support and resistance. And that's literally as simple as that when it comes to Fibonacci. I don't want to explain it too far in depth, but this is basically what the main areas would look like in the actual market. Does that kind of help you, Kiara?
Yes, thank you.
Perfect. Yeah, so if you guys do have any more questions, just let me know. I am going to be kind of going over some other stuff as well. Let me save that. Perfect. So going over that. Another thing that people want to be talking about is gold and Bitcoin. So I'm going to kind of go over that as well, and be able to kind of show you more so what the actual kind of background behind it is, because it doesn't trade like a Forex pair does. It really doesn't. It is definitely something a little bit different. It's more so like a stock, if you will. It's more like US 30 a little bit as well, if you want to say that. But it's based almost completely on supply and demand, and then your emotions, right? So psychology is a big factor in this, right? Whenever bad things happen in the world, usually gold goes up. That's just how it's always been, right? That's why you will see it back in, like during the actual recession area, right? It just took off again and flew all the way up past, or almost to where it is right now, right? Went to like 1915 and then went back down as soon as the market started calming down a little bit, right? So you actually can trade this very similarly. The only difference is you can't actually use Fibonacci on a larger scale, at least. You can use it on a smaller scale though. What you can do is you actually can kind of zoom in. So I usually go 4 hour or even 1 hour sometimes. simply because this thing does kind of trade a little bit weirdly. This is the highest that gold has ever been. So it does kind of, you have to wait till it kind of goes down a little bit. But what we can do is still take Fibonacci retracement at the top of where it was, boom, and then go down to, let's say, right here, right? You can kind of tell it's not perfect, right? But you can definitely see where the parts in the market are that are most highly looked at, right? You can definitely tell that there was some support and resistance right here between 50 and the 38.2, right? And then it turned in from resistance, broke past it, right? Went back down, and then actually stayed as support, right? So you can definitely still see that the 71 and the 78.6 right here are still used as support. So you can definitely tell that this is more likely going to probably be used as support and be holding this up, right? More than likely, that's exactly what's going to happen for the next couple of days. Once gold breaks probably these highs over here again, that's when you're going to start noticing, that it's going to start doing this a lot. Break, retest, break, retest, right? You're going to continually see that happening until, of course, the news dies down and all of the different psychological factors kind of die down. But more than likely, this is what's probably going to happen with gold. The reason why you don't necessarily want to learn how to trade gold, but you definitely want to be able to kind of see that the differences in how those two different markets actually work, right? That's one of the biggest things. So the next thing I'm going to kind of go over is the wedge system. The wedges in this actual market really do work well. It's not perfect, of course, but it definitely does help out a lot. And being able to basically just drop a wedge, right? So wedge, same thing as like a pizza slice or anything else, really. It's going to look like this. And what we're waiting for is this thing called a breakout, right? So I can change the color real quick. All right, so breakouts will usually happen in two different ways, right? They're either going to break upward, retest, and continue up. I'm going to pull this down so it's not confusing people. All right, boom, right? So it's either going to be breakout, retest, and keep on going up, or what it actually can happen is breakout beneath, retest, and then continue back down, right? Create that lower low and those lower highs, right? So what we would be looking for is lower lows and then lower highs. Boom, right? You're going to notice that right here. This is a lower low, lower high, lower low again, a lower high, and then, same process, keeps on going lower, right? That's what you're going to be noticing if it does break out to the bottom, retest, and continue down. And the exact same opposite thing is going to happen for the upside, right? You're going to see higher highs and then higher lows, right? That just means that, whenever you see like a little peak of the mountain, if you want to call it, this is going to be the new higher high. This is going to be the new higher low, right? I wish I could kind of delete that, but that's kind of like the same premise of this. I'm going to do it white just so you can kind of see a little better the differences at least. Boom, right? You can kind of tell that's how we're kind of look at the market when it comes to stuff like gold and stuff like gold, oil, and even to some extent Bitcoin as well. But yeah, this is literally how it's simple as it is to trade it. If you look for higher lows, higher highs, for equal highs, right? So this is what an equal high would look like, just like this. Boom. These are called EQs, or you can do just equal highs. Equal highs. Right. I usually just put EQs on my graph so I can kind of tell that that's basically what it is. But yeah, equal highs, that's literally what it is. And you actually can make good money off of that, right? You can still, basically profit a good amount. That's about 400 pips. So you can definitely profit off of that still and be able to, kind of utilize this system as well. And just wait on this. Now let's see. Next thing I want to kind of go over as well I actually had one question. Is Sylvester in the chat real quick? I think he is.
Right here, bro.
Perfect. I actually wanted to give it over to my boy Sylvester. He's actually been really successful with Bitcoin, right? He's been able to actually kind of, even show me some of his charts where I'm like, I didn't even see that coming, right? So being able to kind of see how he trades it, definitely going to be interesting. And I kind of wanted to get your input on Bitcoin as a whole, bro.
Yeah, bro, definitely. Shout out to you too, bro. You honestly just like put me on and stuff with all this trading, and it's really been a game changer for me. Can you guys see my chart right now?
Yes.
Okay, so kind of from what I've known and learned from Zachariah, who's someone that I really look up to. He's been trading Bitcoin for over like 2 years and a half, I want to say. He's been like studying it, And something that he said in one of his calls is that Bitcoin likes to do kind of like those wedges that Andre was talking about. So you guys can see here, this is from like 2019 in September. So what I like to do is look at Bitcoin on the 4 hour, the daily, excuse me. And I kind of just like to not even look at the candles. I like to go into the line, which is kind of showing you where, um, you know, the the candles close, not like the wicks and stuff. So if you could see right here, it wedged and then it dropped like significantly. It actually broke out a little bit, retested, and then it dropped like uh, about 3,000 pips. It's at 10,000. Each dollar for Bitcoin is about a pip. So yeah, about 2,000, 3,000 pips. Not bad, And that happened, let's see, that's September 22nd. And about like 3 or 4 days, guys. Come on. That's pretty good, 3,000 pips. Here's another example of the same thing. And a month later, actually, in October, same thing. Wedges up, and then it drops. It's at 9,000. It dropped all the way to like 7,000. That's 2,000 pips in like a couple of days. So that's pretty good, And then most recently, something I just showed Andre the other day is, as you may know, if you've been looking at Bitcoin, look at this. It's insane. I made that wedge for like, hold on, like April all the way to just like last week. And it broke out for like 2,000 plus pips, So it's pretty crazy. If you guys have Osprey as your broker, something I told my team was, so for every dollar that Bitcoin moves is kind of like categorized as a pip. So let's say it moves from like 9,200 to 9,300, that's 100 pips, right? So if you have Osprey, a 0.01 is $1 for 100 pips, right? And then a 0.10 is $10 for each 100 pips that Bitcoin moves. And then a whole lot, which is 1.00, is $100 for each 100 pips that Bitcoin moves. So imagine if you caught like I don't know, like a 2,000 pip move. Pretty good payday, So yeah, pretty much that's what I got. It's extremely bullish right now. The third halving just recently passed, which means the supply got cut. Yeah, so I feel like we might come back and like retest maybe 9,000, and then we're just gonna take off from there. Honestly, Andre, you got anything to
Definitely.
add?
No, definitely. I think you kind of covered, the simplicity of trading it. I think that Bitcoin is super simple to trade. It's just you have to kind of educate yourself on what to look for, right? Because it's not necessarily a forex pair. It is more so something a little bit different, and it's something that many people don't really know how to trade. They just try it and then they see if they actually can make it or not. But I've seen your success. I've seen Zachariah. I've seen a lot of other people really just take serious notes on it and be able to really identify those quick little marks, right? I don't know if you see it, but I can already I bet you I can predict that, you know, this is going to be our low, this is going to be our high, and we're probably going to see something like this happen again. More than likely, right? You're going to see another one happen. Like CJ says, you know, I love pizza just as much as him, and honestly, Bitcoin loves pizzas as well. So definitely love that, and thank you, Sylvester, for that. But yeah, I'm just trying to teach you guys and show you guys the simplicity of trading, right? These patterns are not difficult to actually look at. They're just difficult to first learn and then identify. But once you actually do like identify them, they're pretty simple and they're not too difficult. It does take a little bit of practice, of course, right? I think Sylvester's almost been doing this for about a year as well. Actually, just about a year, actually. And I've done this for about a year and a half now. And being able to really just, you know, hone down our skill set to what this really shows us is like just been amazing since day one. So one last one that I do want to kind of go over is actually going to be Forex. So it's going to be Great British Pound versus US dollar. Now for this one, this is one of the major pairs that trades a little bit differently. It is a mix of how Euro USD would trade, but also a little bit of how gold and Bitcoin would trade, right? So it takes a little bit more of a looking out for different patterns. It takes a little bit more from being able to kind of check and see, you know, on a bigger scale and also on a smaller scale, like what it's really trying to do. But first thing I always do, like I told everyone else before, take out the horizontal line. If you want to as well, press the little star symbol. So that way you actually can have your own personal little, you know, like your little hot bar for anything that you really need. So there's that. Let me actually show you real quick. So it's down here. I have mine right there. All I can do is just click on that. Instantly I already have horizontal line picked up. And then also right here is going to be stay in drawing mode. So you actually don't have to keep on clicking back and forth. You can just click it once and it'll keep on drawing for you. So anyways, first things first, I'm going to do lows and highs, right? So down here, this is going to be a low, right? I saw that. I was like, more than likely it's going to be important. Boom, I'm going to have a high over here, right? This is all in the 4-hour time frame as well. Now I'm going to do second level type of stuff, right? So this is going to be second level right here. This is another highs right there. Perfect. It almost matches up with this one. Now I'm actually going to look, all right, this is going to be a second level low, right? You can tell support over here, makes sense. Now what I'm going to do is kind of zoom in and see if I can kind of get something going along these areas right here, right? So I'm looking for support. I see these little wicks over here as well. I see this high, so I'm probably just going to go based off the high, right? It doesn't seem perfect, like I said before, but just being able to get the gist of it, that's really what's important. Now over here, I see these highs. Boom, click one more time. Now I've kind of gotten a good area of where markets should probably be bouncing around it. Now I can go over to the 1 hour, right? If it'll load, there we go, perfect. Now you can kind of tell, all right, perfect. So we have breaks and retests, right? Continuously over and over and over again, all the way up, right? More than likely, it's probably gonna be an uptrend, right? We're gonna either wait for a big sell-off or, you know, we're more than likely gonna see that this is gonna continue up. I'm just going to put a trend line there. Nothing too crazy, right? And then you also can do that one, just like that, right? More than likely, we're going to see this trend. Boom. Kind of zoom in real quick. Now we're going to test and see, right? This little measuring tool, this will basically measure how long and how many pips the market is going to move, right? So with that one sell, you're looking at about 100 pips, right? So we can kind of zoom in. We don't have to be too greedy. And we're gonna be able to kind of tell, okay, fib retracement, right? So I'm gonna go from top to probably this bottom over here. Go from top to bottom, right around there. Now what we can tell, we zoom on in, right? Fibonacci has been making sense. 88.6 has been touched, right? 78 or 71 has been touched. 78.6 has been definitely used as well. 61.8, that's where we're actually sitting at right now. And it also just recently touched, guess what? 50%. And then what happened? Instant rejection, right? Boom, right? Straight right there, already up close to, you know, if you would have probably been able to get 30 pips, already close to up to about 27. So that means now, more than likely, what we're going to see, right? If it touched it, already went up, right? Went above the 61.8, went back down, stayed above it, right? So what you can do, more than likely, we're going to see something like this happen. We're going to see, yep, it's already doing it. All right, we're going to see a slow movement up, right? Break, retest, break, retest, and then possibly even to up here, more than likely, right? So they already did have that big down and then boom, touch 50%, and it already has that momentum going back up. So more than likely, we're going to see something like this happen. If you want to, if you don't have to, of course, if you want to actually get out your demo account and then just place a buy-in for here, right? You can have your take profit at 1.3144. I'll do it right now on my phone. This is a demo trade. The reason why I'm doing it on my demo trade is because, for one, right now, this is just, you know, me looking at the charts for like maybe 5 minutes, nothing too serious. And also we'll be able to actually kind of figure out and look for these little keys in the market. I like using my demo account like it's actually going to save me out of jail. The reason why is because, you know, the more you practice and the more you're actually able to check these different, you know, these different accuracies in the market, like something like this, the more you get used to seeing it in the market and not having a problem entering it within your own live account, right? So we're going to do, right? So this is an average of about 60 pips. So we can do about 20 pips stop loss if you want to be at 30%, right? So 20 pips is right around there. I'm probably going to do a little bit lower right there. So 1.306, 30621, right? And then just press buy. Instant execution. Boom. Right? And then by the end of tonight or even tomorrow morning, we're going to see whether, you know, that's going to go all the way up or go all the way down. Like, right, like I said, it's demo count. Don't take it super, super seriously. But just try to take out as many demo trades as possible, right? Because the more practice you do have, the better you do get, you know, against popular belief. It actually is true. The more you practice, especially in a market like this, super important. So that's going to be that. Does anyone else have anything else they want to go over? Any pairs that they're personally looking at or anything else along those lines? Anyone at all?
Yeah, bro, I got a question.
All right, perfect.
Yeah, so how kind of like, I know you didn't really go over it, but as far as like the psychology with like trading, how do you like get like help with like FOMO, so like fear of missing out on like a trade? How do you kind of like deal with that?
The best way to really get rid of the fear of missing out is literally just taking your demo trade, right? So if you really want to get into a trade and you don't want to necessarily lose money on it, but you do want to at least be able to enter it. Could you guys mute yourself real quick?
Yes, he does. He doesn't have the keys.
Mute. There we go. Perfect. So first things first, like I said, if you are worried about a trade, but you do want to kind of get into it just to see if you're right, always demo trade it, or even just mark it up on your chart and just see, you know, through the arrows, you know, which way you think it's going to go. Like I said, you know, I'm going to be personally trading probably for the rest of my life. And so is a lot of other traders within our community. So don't feel like you should be so rushed to actually, you know, enter a trade, make, you know, X amount of money. Really just put your actual legitimate time into it, but never put your emotions into it, right? If you can put all of your energy into it without actually having your emotions attached to it, that's going to be the key, right? All of these people that you see on Go Live, on the Academy and everyone, they've probably lost way more money than you've ever gained during this entire, you know, platform, right? They've lost thousands of dollars. I've personally known people that have literally lost thousands of dollars in a single day. And what they have to do is they have to just shrug it off and keep on trying, right? If you give up, then boom, you're going to let the markets basically control your cash flow, right? Versus if you actually take control of your own money and take control of your actual own emotions, you're going to be able to skate through this, right? Every single loss is not necessarily a loss. It's just a lesson, right? So that way, the next time you actually can become better. You actually can get really, really good at this. And, you know, later down the line, you're going to be able to, you know, have those higher level educational, you know, calls with people like Zachariah, right? Or people like, you know, Jonathan Alok, or, you know, Arvinder Singh, or, you know, Kiani, or John Guaman, or whoever it is, right? You're going to be able to literally say like, hey, you know, I'm slowly learning this, and I've been able to literally, you know, really conquer your emotions and being able to actually, you know, become profitable through this. And it really just starts with all the mindset, right? So being on the calls, right? Being able to, you know, read the right books, being able to really just keep your head on a swivel when it comes to information anywhere, right? Most of these people that are actually a part of our team are traders, right? They legitimately trade every single day, right? And so being able to learn from them and actually have lessons from them, that will seriously take you really, really far when it comes to the fear of missing out. And honestly, like if you have a 20 pip stop loss, I mean, you're losing $2, right? $2 versus, you know, the ability to actually, you know, make, you know, $6. I mean, I'm willing to take the risk. And also, you know, if I lose, it's only $2, you know, I spend that on gas like every other day. So that's kind of like my answer to that.
Thank you, bro. I appreciate that.
Perfect. Yep. So yeah, if that is it, we can definitely hop off the call, and we're gonna be able to. I'm gonna be able to actually send that over to YouTube as well, so everyone can kind of watch that video over. Whoever couldn't make it, or anyone on people's teams that couldn't make it. But yeah, thank you guys for, you know, actually participating and being a part of the actual call. And I hope this trade actually goes well. So we're gonna see how this does by the end of tonight or tomorrow. Let's see. I think that was the number, right around there. Right. So, yep. I shall talk to you guys later, and I hope you guys have a great rest of your day.
You too, bro. Thank you.
Perfect. All right. Talk to y'all.